When two giant corporations decide to merge, it creates a new powerhouse. By combining their resources and customers, they can dominate their industry in a way neither could do alone. Right now, a similar move is happening in the digital asset space. A major financial platform named Aerodrome has just announced a full merger with its sister protocol, intending to combine their operations into a single global exchange. To understand why this matters, you have to look at where Aerodrome operates. It lives on a network called Base, which was built by Coinbase. You can think of Base as a newly paved high-speed digital highway designed to move transactions faster and cheaper than older systems. If Base is the highway, Aerodrome is the bustling central financial district built right alongside it. It is the primary place where people pull over to trade and exchange assets. Joining forces with another platform is Aerodrome's way of trying to grow from a local exchange into a global one, with the ambition of becoming a central hub for the entire digital economy. Imagine you want to swap one currency for another, but you don't want to use a bank or a broker who takes a cut. This setup, which removes that middleman entirely, is what's called a decentralized exchange. Notice how individual users connect directly to a communal vault of funds. Instead of relying on a corporation, users trade directly against this community-funded pool, managed entirely by automated software. This central repository currently holds over $475 million. This massive pool of capital separates Aerodrome from highly speculative, unproven crypto projects. The platform acts as a toll booth for all those trades, generating real daily revenue from actual users relying on its services. To operate this hub, the platform has its own internal asset called the Aero token. The easiest way to think about owning Aero is to picture it like owning shares in a fast-growing tech startup. This visual breakdown shows the current valuation, a total market value of $394 million. The container holds a maximum 1.9 billion units, but right now it's only filled halfway, with 940 million active units circulating. That remaining empty space represents a specific risk. As the platform releases the rest of those units over time to pay for growth, it acts just like a company issuing new stock. Having more units in circulation dilutes the shares you hold. To manage that risk, the team ran a corporate buyback. 1.4 million units were extracted and permanently locked behind a heavy padlock symbol, removing them from circulation entirely. By pulling those units off the open market, the protocol is actively managing its supply. It reduces the number of shares that can be sold, aiming to protect the value for existing investors. However, early-stage investing in high-growth digital infrastructure often comes with extreme turbulence, and Aerodrome has certainly experienced its share of severe price swings. This chart tracks the volatility, a sharp decline from a peak of $2.34 in April 2024, falling 81% to 41 cents. Sentiment shows a cautious recovery. The line stabilizes upward, with traders watching a dotted horizontal line at 60 cents, acting as a price ceiling. These wild fluctuations have caught the attention of major investment firms. For example, a large company called Grayscale recently removed Aero from one of its specialized collections of digital assets when they updated their list of recommended investments earlier this year. The initial hype phase has clearly cooled off. Without the momentum of a massive price surge to rely on, investors are now forced to look strictly at the company's underlying fundamentals to judge its true worth. So let's look at those fundamentals by evaluating the platform's pros and cons for this quarter. On the positive side, Aerodrome maintains clear market dominance on the Base network. It has successfully locked hundreds of millions of dollars of real capital into its system. The biggest positive catalyst is on the horizon for mid-2026. The upcoming merger with its sister protocol, Velodrome, will create a massive unified platform, known simply as Aero, designed to operate across multiple networks. On the negative side, investors have to contend with ongoing dilution. As scheduled tokens continue to unlock, fresh supply hitting the market creates constant downward pressure on the price. The second negative is the short-term hit to their public image. A major institutional player like Grayscale stepping away can make more traditional investors hesitant to jump in. When you weigh all the evidence, the core business model is strong and generating revenue. Ultimately, investing in this asset is a direct bet on whether the development team can flawlessly execute their massive 2026 merger and bring their global vision to life. If you are looking to acquire the asset, it currently trades on centralized exchanges like Coinbase and Bybit, or you can swap for it directly on the Aerodrome platform itself. As always, this breakdown is for educational purposes and is not financial advice. Please do your own careful research before putting capital into any digital asset. If you found this helpful, hit that like button and subscribe to the channel. We will be back next week with another plain English breakdown of the crypto projects you need to know about.